Welcome to Season 2 of Fintechs a podcast by the one and only policy shop for Canada's fintech scene. I'm Alex, and I'll be your host. Join me as I talk to the people who are making a big difference in the lives of Canadians. Today, our guest is Peter Aceto. He's the guy behind Tangerine, Canada's OG challenger bank. Now he's with KOHO, trying to do it all over again. Join us as we talk to Peter about all this and more. Peter, thanks for joining us today.
Yeah, my pleasure. Thanks for having me.
First question, what is weology?
Let's get right to it. Wow. Weology is obviously a book that I wrote probably about 10 years ago or so. But it was really about a philosophy. And a lot of the lessons that I learned as a leader, most of which were in the context of my 21 years with ING Direct, which is we now know in Canada as Tangerine Bank. And I think like the key takeaways and why I and others thought a book was a good idea, which is it really is about culture and about leadership. And I think that every organization, even at any team, any gathering of humans, a culture happens on its own. And I think back in the very early days of ING Direct, which would have been in the late 1990s, it was very visionary to see culture as a competitive advantage, a valuable tool that can actually lead to business success. And the story of weology is about, when we, the team, comes before me, my own personal interests, how everybody wins, right? The team wins, your users or your customers win, the employee wins. And that certainly was my experience in that part of my life.
Can you give me an example of, I think I know what you're talking about, we before me, but can you give me an example of a set of behaviors or a kind of scenario that exemplifies we before me?
Yeah, I mean, of course. I would say, so listen, I haven't, I sort of left that organization, some time ago after 21 years, and I'm still very, very, very connected with so many people who were on that journey. In part because, in order to make personal sacrifices to make choices that are in the best interest of our customers and your teammates, had led to great success and a feeling of winning. And when you're winning, everybody succeeds. So certainly in my career, I mean, I started there when I was 27 years old as a lawyer, and spent 21 years or a substantial amount of my career just working hard and putting the team's interests before my own. And it led to, being on a winning team, both in Canada and in the US and from a global perspective. And it led to my success. And I think that that almost everybody I work with who ascribe to that philosophy, we're very successful there. It led to lifetime memories and a feeling of great pride, because when you do think about work and life that way, you're making a great contribution. You make money personally and you have success, but you're also making a great contribution to society. And it's rare that you get the opportunity to do all those things together.
What's the difference between someone who practices we before me and someone who doesn't?
Yeah, no, it's very easy. When you do have a clear culture and everybody knows what it is, and you spend time articulating it and talking about it, and you spend time measuring it, and you have regular recurring conversations, calibrating everybody around, yes, that's what it looks like. That's what good looks like. And that's not what good looks like. It becomes very, very, very clear when people, are not a right fit in terms of when they want to be a part of your organization, or if they're already a part of your organization and they're not a right fit. So when you are quite deliberate and quite clear about the culture you need to have in order to be successful in the marketplace that you are in the business that you are in the competitive landscape that you are in, and when you're that deliberate about it, you can see when people are behaving that way. So, we had some very, very knowledgeable, very capable people who, on one hand, who are so good at getting things done, but did so on an individual basis and weren't very, very collaborative. They got incredible results, but listen, to be very honest with you, they were assholes. And sure, I was very attracted to that as a CEO, not the asshole part, but the part about getting things done very, very quickly and delivering results. But all in all, it really erodes the culture of the business. And those type of people either need to be coached to be more collaborative and involve others, because we know in our organization anyway, that when we were collaborative that way, we ended up with a much better outcome and a much better product, and our customers were much, much happier about it. Or on the other side of things, we needed to be very, very different than our competitors, which would have been the big banks, in Canada or in the US, and people who brought that mindset with them, that sort of slow, risk aversion, not willing to explore, not willing to ask the hard questions. Why do we do it that way? Why do we have to do it that way? Why do you need that document to be 2 pages long when maybe it only needs to be a sentence? So people who are uncomfortable with challenging the status quo and saying, why do we do it that way? Are we willing to make a change? Those people also did it. So I think there's many, many examples. And if you're quite deliberate and you measure and you provide regular recurring feedback, those things are very, very easy to see.
Right. Is someone who practices weology, can I think of them as someone who is maybe highly agreeable and highly conscientious?
Highly agreeable, no. Highly conscientious, yes. What do I mean by that? So it's not part of the philosophy to just go along with the status quo. It's actually part of weology is challenging the status quo. And that, and the status quo means the way banking is done or the way banking is perceived, or it's the way we do things, right? And if we were doing things a certain way, the expectation was that, usually informed by our customers, to challenge things and agnostic of level and title. So agreeable, no. Open, vigorous, honest debate, as long as the debate was because you wanted what was in the best interest of the business. So, so that collaborative mindset, that sort of putting the team and the customer in at the front of everything that we do, but fighting and debating and moving on that is a part of weology as well. Again, as long as what you're fighting for is what you truly believe is in the best interest of the team.
But when it comes to disagreeing with someone or challenging someone without being an asshole, what are the things that need to be true of the one disagreeing, and what needs to be true of the person being disagreed with?
I think 2 things, and I think this applies in business about business decisions, but it also applies to a manager and her or his direct report, or a coach, or probably even in interpersonal relationships as well. I think that the person providing the, let's say, feedback or the disagreement, if it's clear to everybody who is involved that you care about them, or you care about us, or you care about the corporation, and that your feedback comes from that place of caring, then I think people are a lot less likely to be defensive, a lot less likely to be offended by what it is that you're saying. So I think that's probably the first and most important thing is, why are you providing this feedback? If it's a part of your culture, and if it's expected from the very, very beginning that everything gets challenged, then it should be surprising when you're not challenged, actually. And that's the thing that is suspicious and makes people feel oddly. I think the receiver, it's hard to receive feedback. It's hard to be scrutinized. But again, if you're doing it inside an organization where that is the expectation, and that it's not you in particular, that everything is challenged for the benefit of the business and for the benefit of the customer. If we all have that mindset, then I think it works really, really, really well. I think those expectations need to be set up front when you join the company, because it can be quite a culture shock when that happens. So I think those are the key ingredients.
With what we can know of Weology, can you make educated guesses from the outside looking in about which companies have sort of bought into Weology and which ones haven't, other than merely performing well or better than others?
I think so. I really think so. Weology starts with, a vision of creating something that makes people excited, whatever it is, right? And has an impact. And figuring, strategically analyzing what the inside of your organization needs to look like, in order to be successful, and taking the time to articulate what that is. And then everything that comes out of that organization in the form of the marketing and advertising, in terms of how consumers interact, with that brand, in terms of the products and the pricing, that's the power. So yes, you can see this from, this consistency and alignment with the vision and the culture that's articulated, and the transparency. In my Tangerine days, ING Direct Tangerine days, and I'd say even more true of KOHO Financial, who I'm with today, who shares publicly, here's our values, here's what you can expect from us. If we are not living up to our values, and you as a customer or a user see that, call us out, tell us about it. We'll listen to it and we'll make adjustments. The products that come out are transparent. There's no secrets. There's no mice type. There's no hidden fee. When you see that consistently, that there's been a culture created over time that leads to this sort of consistent execution.
One thing you said earlier in the conversation is that culture happens on its own when people get together and interact. And corporate cultures be intentionally designed by those at the top, or do they spontaneously emerge in a way we don't fully understand, because there's a chaotic almost element to it? We're pushing people together and we don't really know what's going to come out of it.
I think it's a perfect question. So, when there's a group of people together, they're together all the time, like whether it's in a team or like a sports team, or whether it's any type of people, there is a culture, there is a set of norms that gets created over time about how those people interact with each other, and the behaviors that are expected or not expected. That happens on its own. The lesson that I learned several decades ago is that you could create the culture, that you can articulate the culture you need in order to be successful in your industry and your market. Just like a strategic plan, right? You can strategically devise the culture that's going to allow you to be differentiated over time in a sustainable, non-replicable way. So I think that is in many ways the lesson. One of the key lessons of Weology is if you're starting a new business, or if you have an existing business which already has a culture, whether you deliberately chose it or you didn't, that you can think strategically about what those norms and behaviors need to be in order for that company to succeed and compete, in your marketplace. So culture happens on its own, or you can harness it, create it, devise it, put the structures in place to ensure that everybody understands it, that you're measuring it, that people are getting feedback on a regular recurring basis about where they are. And if you do those types of things, you can create a culture from scratch or influence the culture that you already have to ensure that you have sustainable, successful, competitive advantage over your competitors. But it's hard work and it's deliberate.
One thing I've read recently is that it's easier to train a dog when it's puppy and it's growing up because it hasn't learned all kinds of things you need to untrain. This is relevant to me because I recently got a dog. It's an 8-month-old puppy. It's a lot harder when it's older. It knows all kinds of things that you don't like. You need to unteach them and then teach them the new things. Are cultures like that? Like say you inherit a bad one. Can you fix it, or do you have to just kind of blow it up and start anew?
So I love your analogy for two reasons. One is I'm also like, I've got my first dog too, although I've had him for 7 years, and I've learned this lesson, right? There's someone in my neighborhood who's got a similar age dog, and he doesn't use a leash, and the dog just behaves, and mine doesn't. So I think your analogy is true. My advice to you is invest in the training up front. You'll appreciate it, and it's been very, very difficult to untrain our guy. So I think, although a simple analogy, it is extremely true. It is much easier to start a business and think really hard about that culture up front and put it in place through every single hire. I mean, I know it's old news, but Tony Hsieh from Zappos was someone who, explained how he, shut down one of his startups because the culture was wrong. And then he started that one with the culture that he really, really wanted. However, you can absolutely evolve the culture of a business. It just is a lot of hard work, and it's a very significant change management initiative. I've had the privilege of being a part of an organization where that culture was a strategic advantage that was devised up front and it was executed every day. I've also had the opportunity to, go to a company that needed to be fixed. I worked for a company called Mortgage Alliance. It's one of Canada's largest mortgage brokerage companies, and they had some challenges several years after an acquisition. And I was asked to come in and fix it. And I think understanding the existing culture and evolving it to figure out the type of culture that we needed was absolutely a very high priority. Articulating a clear vision, articulating how it is that we needed to behave differently on the inside and the outside in order to be competitively successful. And so it is a challenge because there are people, who are in an organization for 10 years, 15 years, very, very high performers, and sometimes they're very, very resistant to change. So it is absolutely possible. It can be done the same way that I articulated before when you're starting from scratch. It's just that it takes a lot more energy to make these changes.
Can you say more about that? Like what more does it take?
Well, instead of starting with something new, like clay or a baby dog, you've got a whole set of behaviors that were maybe rewarding to people in the past that need to be changed. So I think the formula is similar in the sense of thinking about what your strategy is, thinking about how culture can contribute to that strategy, meaning in order to be different and in order to grow, what are the behaviors internally in terms of how we serve, how we treat each other, how we work, how we create product and service. Again, articulated just like you would, do a strategy document. But then the conversations, the making sure people understand, the discipline about saying, hey, that was a behavior that was really, really appreciated a year ago. But remember, we agreed that we want this behavior instead of that behavior. Did you notice in that interaction that you were doing this? Let's talk about it. And oftentimes you'll find lots of misunderstanding. I didn't know that's what you meant. I'm not sure in the details what, that behavior it is that you're referring to. So it does require, that flywheel momentum You actually have to stop the flywheel and then change the direction of it. So it's very clear communication, regular articulation, measurement, regular feedback. And I'm not talking about monthly feedback, quarterly feedback. I'm talking about feedback multiple times a day. As you see a behavior, that was behavior we appreciated in the past, but we've decided it needs to change to this behavior. People need to be pulled aside in the middle of the day to point it out on a contemporaneous basis. So as you can see, the way I'm explaining it, it takes a lot of energy, on the part of leadership. But if it's that important, and I assure you, Alex, it is, it's worth the effort.
Are leadership philosophies like Weology, but others as well, generalizable, or are they only really helpful in like highly particular contexts? Like, are there situations where Weology would just be a spectacular flop?
Well, no. Okay. So are they generalizable? And I would say no. Like, I don't think you can look at, a company that is doing this right, whatever this is, right? Like using culture and behavior as a strategic advantage to be successful. I do not think you can copy that. You could try, but it won't work. And I think because it's not authentic and it's not directly applicable to your business or your industry or your competitive ecosystem. So I think like usually a company doesn't look at another company and go, they have a great strategy. I'm going to do the exact same strategy. I think you have to go through this sort of strategic process where you figure out what an authentic culture needs to be for your organization. And then you deliberately have to go through the steps of execution in order to make it real and sustainable over time. So I don't think you can just copy it from someone else. You can't sacrifice process, deeply understanding and choosing the culture you need to have that's authentic to your organization and your industry and your competitive landscape in order to use culture as a competitive advantage.
Good culture is obviously important, but there's other stuff that makes or breaks it. What are the top, say, 1 to 3 things that need to be coupled with a good culture to make a very successful company?
Well, I think I've alluded to them sort of in some of the answers to the questions, and I'd say maybe 3 things, which I think are really fundamental to how you successfully execute anything. And I know we've heard the analogies about strategy and how execution will eat strategy for lunch. And I think that's very true. I mean, you can have a great strategy and you can have a great vision for the culture and behaviors that you want to have in order to be successful. But it's all about the execution. If you don't execute properly, then none of that stuff is going to become real. And I think the fundamentals of great execution are super clear objectives, right? Like, and people sometimes, write these things on a wall, like, we want to be candid, right? Well, there's a lot more that goes into that. What are the specific behaviors we expect from you every single day? And I think those need to be discussed and deeply understood in the organization. Clear communication. So number 2 is it's just fundamental part of execution. People need to understand it. It's not just, I'm going to tell you, here are the 5 things I expect from you, Alex. You need to be able to challenge me and say, well, what do you mean by that? Well, what about this situation? What about that situation? And I'm not going to have the answers to all those questions. So it's a lot of uncomfortable work for both of us to get specific enough about what we actually need to get the results that we want. And of course, you won't be surprised to hear from me is measurement. These things that we need to measure them. We need to reward people who are exhibiting these things on a regular basis, reward them financially with promotions, with pats on the back, being acknowledged in public for living these values and behaviors. And as well as it's got to be a fundamental part of our hiring process and our performance review process, for example, as well. I look at, KOHO Financial, and there's several values which you can read are very, very, very public. Two of them that really stand out for me are, is this sort of user first expectation, but then also dynamism, which I really, really like, and had to figure out exactly what KOHO meant about dynamism. And it's around an engagement and a speed and an intellectual curiosity that happens at 100 miles an hour every single day. That's what the value of dynamism is. And I think talking about this with your boss and getting called out or supporting people who are exhibiting it every day is a great way to just make it a part of our daily behaviors. So I'd say the three keys how you actually make this real.
You mentioned intellectual curiosity and speed in your elaboration of what dynamism really means. Do you think an intellectual curiosity can be at odds with the speed at which you deliver? Like when I think of me at my most happiest times, it's when I'm most fully and purely exercising my intellectual curiosity. But that's a slow, messy process, often without a clear end. It's often kind of foggy where I'm ending up. I'm just kind of following I'm following like a trail of crumbs, hoping that it's going to lead me to like a cake eventually, but I have no idea where the cake is. I'm not even sure it's a cake. Quite frankly, it just could be.
Well, you are special, in that regard. And, no, I get exactly what you're saying. Okay. So as a business leader for me, and I look at something like dynamism and I talk to you about intellectual curiosity and speed, and I go, okay, so I've certainly worked in contexts where we have analysis paralysis. Let's keep looking. Let's keep looking. Let's keep understanding. Let's keep understanding. Okay. So that's certainly a problem. Particularly an organization like KOHO Financial, who articulates that one of its competitive advantages over its competitors is speed. Okay, and I thought we were fast at Tangerine relative to our competitors. Well, KOHO is 10 times faster, right? And it comes from this value, this behavior of dynamism. But you can still have intellectual curiosity and explore and dig and look for technology solutions. Look at the way things are being done in other places around the world. How do they solve this problem in some other country? I remember in my ING Direct Tangerine days, my CIO and I, we used to travel, and we as the guests of IBM or Microsoft or Amazon, wherever the case may be, like see what was going on around the world, right? So that we could be on top of these best practices. So I think if you've got clear goals, you have dates, you understand speed is of the essence, you temper that intellectual curiosity with deadlines. So you expect it, you want the brain to do that intellectual work, but you've got a bit of a constrained window to do it in. And I think as a senior leader, like nothing is black and white, and you have to deal, with a little too short, a little too long. And I think that's the art where someone has to say, hey, listen, we need to stop now. We've done enough. It's time to move forward.
In a last question on this, and then I'll move on, I promise. In a place where this dynamism is the most important, where you really badly want to win, is it better to err on the side of being too intellectually curious and maybe a bit slower, or too fast and maybe not intellectually curious enough?
Great question. KOHO Financial is clearly in the space of the speed is the priority. Listen to your customers, create a product for them quickly, give it to them. If they love it, double down, make it better. If they don't love it, kill it, move on. And so they get a lot of stuff done and tested, and it works. So yeah, I mean, I think it really depends on the organization. I would say in my Tangerine leadership days, we were pleased to be much faster than our competitors in the Canadian market, but with more in terms of homework and thoughtfulness and procedural stuff as well. So I think that I think there's a pendulum all the time, and you got to try and figure out what the right place is, and it depends a little bit. KOHO is absolutely clear that speed is the priority.
Let's pivot to Canadian banking. You're leading the effort to create a bank for KOHO. We had Dan on the podcast not too long ago where he talked all about KOHO. What's ING's story? And can you tell me the Netflix movie version?
Yeah, I mean, I love the story. I'll start with one of my favorite stories. So I'm a lawyer. I'm 27, 28 years old. My dad calls me up. He says, "Hey, you want to come with me to the auto body shop? I maybe need his tires changed or something like that." And it was a Saturday. I said, "Sure." So we go to Billy's, and in the lobby was this guy who I'd never met before. We just happened to be there. And he was so excited. And he was explaining how he had just moved back to Canada. He'd been hired by this Dutch company to start a new kind of bank. And he was telling everybody who would listen. And I was very, very quite taken by him. And he told a story about creating a bank that was going to treat Canadians really, really well in terms, to reward their great savings habits, which back then they weren't really getting rewarded for their great. Back then, Canadians were actually pretty good savers. That we were going to use technology in a way that was going to blow consumers' minds, that we would be able to approve a loan so fast that we would say, "Hey, listen, we'll call you back in an hour," even though we didn't really need to. I was so compelled to create this challenger bank with this guy to change the Canadian landscape. And actually part of the agenda was to build, so Canada was the first of 9 ING Directs around the world. And part of the plan was to build what we call the bank in the box, which is figure out how to do it here in Canada and then just take it and drop it in other countries. The systems, the products, you name it. Actually, Canadians were involved in the launch of every ING Direct around the world. So when I heard this story, I literally couldn't sleep for 2 days. I found out his phone number and no cell phone stuff then. I begged him for a job, and for some reason, at 28 years old, he gave me a job. And I was the 8th employee of ING Direct. This is a company where you ask about the essence of it. Again, back then, saying in order to be distinctive and different from our competitors, which was going to be so necessary in this market, we needed to be unique on the inside. So we refused to hire bankers or traditional bankers anyway. The priority on simpleness and transparency. I was the lawyer guy. I was told, "Hey, listen, Peter, you got to come up with our account terms. You get one page. It has to be no smaller than 12-point font, and you can have no mice type at the bottom." Where our, most account terms in this country were 10 pages, 6-point font. You get the story. At the time, we were a telephone bank, so there was no internet and mobile phone stuff. So we were the first branchless bank, telephone bank, and our goal was to have a human answer the phone in 10 seconds for every single customer. We had a spokesperson. His name was Frederick, and in our first television commercial, which was on 60 Minutes, Frederick walked in a marketplace among Canadians, telling them that they have a choice that they didn't have before. And of course, a great price. I mean, we definitely had the best savings rate in the country. So, I mean, that's what it was when we started. Ultimately, years of building, what I just described to you, treating clients in this way helped us build a very, very powerful brand, a industry-leading Net Promoter Score, although we didn't measure Net Promoter Score at the time. Ultimately, over the years, it earned us the right to be the primary bank to millions of Canadians. And we added checking and investments and credit cards and, and all those other products as well. So that's the super fast Netflix version of, the early years of ING Direct, which later became Tangerine.
There are so many good things I want to follow up on in there. But give me a second to order this out in my head. So first thing, you mentioned you didn't hire bankers or traditional ones at the very least. Banking is very complicated. It's esoteric. Presumably, there's some advantage to having bankers employed by an institution that wants to become a bank. What special insight do non-bankers or non-traditional bankers have that traditional bankers do not?
I don't think it's insights. I think it's ways of thinking. So listen, a lot of the people had certainly had their experiences working for traditional banks, but they were people who weren't a great cultural fit, for the traditional banks. So listen, I think in part, it's one of the great advantages of launching with one very simple product, which was a savings account. So there's no credit risk. There's there's a lot less types of risks that you need to manage. So the simplicity and the transparency required less demand in terms of those technical know-hows that you need. And listen, we needed, as we went into other products and as we did, mortgage lending and as we got into credit cards, we had to build those competencies, but we had to build it in a way that was not going to jeopardize our culture. And be very cautious about the attitude of the people that we that we were hiring. So I think simplicity was a great way to start. So it didn't require traditional bankers, but it was less about that and more about the mindset. Challenging the status quo, moving fast. Why is it? One of the first challenge when I moved to the U.S. That's when I took my legal hat off. And I spent 4 years in the lending side of the business. And one of the first questions that, things I was asked to do, it said, we would like to launch a mortgage, here in the United States. Peter, you can ask our customer 3 questions. That's it. What are the 3 questions? Whoa, okay. So that rigor and discipline, led to a mortgage application that cut out about 60 to 70% of the questions that we would ask a consumer. It was more than 3 questions, but I had to fight for every question and explain why I needed to ask the consumer that question. So the challenge was, can I get that information from some other place, right? Do I have to ask the customer? Does the customer have to do it and provide it? Or can I get it from tax authorities? Or can I get it from local real estate offices and those types of things? But I think it was a mindset to challenge the status quo that I think was so fundamentally important to why we were faster and nimbler and brought some of the greatest innovations to banking in the world, particularly in Canada.
I want to talk a bit about those, but just one more question about the cultural fit. You said some of these people weren't good cultural fits at traditional banks. Am I reasonable in interpreting that to mean like these are people who probably like went to work at a traditional bank and wanted to pull their hair out because of all the process, all the barriers in front of them, like existential crises every other week? Like It's basically, I'm disgruntled. I don't want to work here anymore. This is crazy. I can't get anything done.
Yeah, I think that's exactly it. So the people who were like, I have ideas. I want to do things. Things are too slow. There's too many meetings. There's too many people involved. So, and I've certainly felt that feeling before too, as, I was a part of, I worked for a big bank later as well. So, yes, I think that's a very good description.
Sometimes I can feel like that. And I mean, to the extent I've used introspection to try to figure out what motivates that. I feel like for me, it's just this like, baseline of like not having a lot of patience and maybe having this like childish restlessness. Is that true for other people like that, or is it like more sophisticated?
Well, Alex, I hate to admit it, but I'm a little older than you, and my wife and I laugh all the time about my childlike restlessness and inability to focus at times and having lots of ideas, and that sometimes get in the way of the execution. I'm pleased and proud, and it's actually served me well. And I think you should feel the same way. I would like to double click on one of the things I said. I think, remember, when IND Direct launched, we were a telephone bank, and we were early adopters of the internet and early adopters of mobile phones and smartphones and all that to first in all those things. And because of our technology infrastructure is really easy to get there, whereas some of our competitors were challenged. But when you start with a really simple product like a savings account, you can hire the best people in your call center that don't have to know anything about financial services, right? If your product is so simple in terms of no fees, in terms of how rates work, if your account terms are 500 words or less, then you can hire people who worked at the Gap or Club Monaco or Telecom, and who are great with people, and you can teach them about financial products. And I think, sure, that gets challenged a little bit when you get into investments and certain products that you need licensing for, but it really made a huge difference in terms of the look and feel that consumers felt, because we had great young, retail people who we taught about financial services. And we had the systems and the simplicity of products that we could do that. So it was, that was certainly an example about how simplicity can allow you to bring other people into your industry and teach them.
The other thing you mentioned is just some of the great products and services you guys launched. Here's a CBC article on the reason behind ING's success, and I'm quoting here. It had no physical branches, charged no service fees, insisted on no minimum balance in client accounts, offered cheaper and flexible mortgages than the big guys, and consistently paid above average interest in its checking and savings accounts. That sounds a lot like, an ad for a challenger bank today. What's the difference between ING and a challenger bank today?
That was a great article. I was wondering which article you were going to read from. We also brought, let's say, customer service first to the market, before anybody else, whether that's remote check deposit and, just many of those types of innovations, like a year before any of our competitors did. So our customers just loved having access to those things that made their life easier, and they felt proud to be first. So that does sound similar to challenger banks of today. And I think it does sound similar, and I think it is. I think when I look at the Canadian marketplace today and I compare it to 1996 when ING Direct was launched, and I see not a lot has changed. Not a lot has changed. I think that we're, historically very Canadians, I think, have less choices today than they did even then, which is frustrating. When I spent so many years of my life to create, to be a part of creating something that would be a real choice, and after all this time, Canadians don't have much in the way of choice. It's a little bit frustrating. Although, as I was reflecting on our chat today, Canadians and people around the world got paid, billions of dollars of interest that they would not have gotten paid if it weren't for ING Direct. Also, not just because we paid them, but it created high yield savings account as a category, that didn't exist before. Our customers in Canada, but also around the world, saved hundreds of millions of dollars in fees in their ability to access products that didn't have fees, and that's great, and we're thrilled about that. And hopefully they're financially more aware and more knowledgeable because they had met us. But I see the need for competition now more than ever, and I think there are people like KOHO who, in particular, have made significant inroads in the last few years. But yes, I do think Canadians need more choice than they have today. I mean, about RBC buying HSBC. We know about National Bank buying Canadian Western Bank. We know Tangerine was purchased by Scotia some time ago. So I think Canadians, they need choice. And that description you just said, I think KOHO fulfills much of that. And I think there's a lot of room for more of challenger banks that meet that description.
So I feel like this is a naughty question for me to ask, so I'm a little uneasy in asking it, but I have to. I need to follow my intellectual curiosity here. Given that not much has changed between then and now in terms of the problems that need to be solved, in terms of the ways challenger banks market themselves, in terms of what they offer to their customers, there are two interpretations one could walk away with among probably many others, but two of them are, this actually isn't a big problem worth solving. We can't actually reinvent any of this stuff. All the innovations are really marginal. The reason there hasn't been much change between then and now is because change isn't really all that possible. We've, done everything we can. Entrepreneurial energy and talent should go into other sectors or elsewhere. Another interpretation is, maybe we just suck at innovating in this space for whatever reasons. Like, talk me out of that pessimism.
Yeah, it would be easy to talk you out of that pessimism, I think. Canada, for a variety of reasons, is a relatively oligopolistic country. I mean, it's not just banking, it's other industries as well. And I think in some ways it serves us well, and we are, the handful of banks that, really have have a great deal of market share in this country, are very strong, and they help Canada be strong and have helped Canada through difficult times. And I great deal of appreciation for that. I mean, these guys are, 100 to 150 years old. But I'm a man of the people, and I listen to them and I observe them and I care about them. And I think more now than ever, the cost of that safety and security is being borne by Canadians in the form of high fees, high minimums, low rates on savings, high rates on credit, inability to access financial products in order to make people's lives better because of whatever our credit standards are, in these organizations. I look at the last 5 years in Canada, and that was a fairly arbitrary number. It could be 4 years or it could be 7 years. And I think about, something like 50% of Canadians live, paycheck to paycheck. A recent survey that I read says that, 49% of women and I think 38% of men do not have $5,000 in saving. 22% of Canadians don't have any savings, which means they can't have the minimum of whatever $4,000 or $5,000 in their account at a big bank to avoid getting charged, very high monthly fees or transactional fees. So I think the demographics of Canada in that regard have changed significantly over time, meaning that there's a very large group of Canadians, 10 million, 12 million of them, who need an alternative to help them get ahead and make their dreams a reality. So that's why when Daniel called me a year ago and we were talking about me helping KOHO, primarily to get into that bank level status, I was excited to do that because I think there's a lot of opportunity. Now, when you look at banking, just in general, I mean, it really is what makes banks strong is capital. And, so you need capital, and that's the strong underpinning of a bank. You need to make enough money so that the people who are providing that capital get, a good return. And I think that's some of the reason why, ING Direct, for example, sold here is, which was a byproduct of, the financial crisis and how it impacted them globally. But I definitely think with the ROEs that the Canadian banks make here in this country, that there was plenty of room for challenger bank competitors, that they should be able to raise capital, that there's a more than sufficient group of Canadians that are looking for an alternative, and there's plenty of room to give them access to the things that they need that they may not have access today. And because of where prices are with fees and rates and those types of things, there's absolutely room to give them great value as well. So I'm excited about certainly helping KOHO, but I definitely think there's a very large group of Canadians that are looking for another option.
There's a lot of room. Canadians are looking for another option. Banking is complicated. It's deposits, it's lending, it's payment cards, it's all these things. But sometimes I feel like as a consumer who is like being bombarded with all sorts of things, I'm always trying to simplify the world around me. For your average consumer, like what actually is banking? Like if you were to distill it down into a bumper sticker, is it peace of mind? Is it financial freedom? What is it?
Okay, I'll tell you what it is. Well, this is my version of what it is. People want to live their lives, right? They want a place to live. They want to have fun. They need to eat. They want to take care of their families, right? I mean, that's what they want to do, something meaningful, and be a part of a community, right? No one wants a loan. Right? I mean, they want to not have to work forever so they can retire, right? So what is banking? Banking is the facilitator of all of that. It's the thing that provides them with financial advice so they can make their dreams come true. It's the thing that allows them to obtain and buy the things that they want in order to fulfill their needs or their wants. If they can't suspend their desire to have something and they need to borrow some money to do it, we could help them, get the thing that they want. I mean, a house is probably the best example because it's really not feasible to pay cash for a house, right? So that's the way I look at it from the customer's perspective. So when I think about IG Direct, Tangerine, when I think about KOHO now, and I think about the specific people that we are looking at, right, that to help, that's really what our goal is. Is KOHO started with the ability to help people spend in a more cost-efficient, less expensive way, and to earn rewards on that. And now is trying to help them in small ways with living their life day to day and giving them access to some credit. So that's what I think. That's what I think banking is. And then there's the retirement piece, which I alluded to before. I mean, one thing I learned early on is that saving, and you can define saving as, in cash or in a GIC or in an investment or an equity or a mutual fund or an ETF or something, but I will put that all as savings, right? Is people who have savings feel safe and secure. They feel more optimistic and happy in their current life. And I think that's sort of a very fundamental sort of value add that financial services companies can have. I think also in Canada in particular, we used to be such an important part of the community. We were advisors, we were very present, from a local perspective as well. I think that's changed over time, but I think banks have big ones and small ones. We have a lot of information and insights that can really, really help people be happy and live the life that they want and achieve their dreams.
What I hear is banks are selling optimism, or ought to be selling optimism. KOHO is doing that now. ING was doing that before. Let's just quickly think about the counterfactual. What happens to ING if it doesn't get acquired and continues going out alone?
Yeah, again, it's an issue of it was really an issue of timing and capital. And if it weren't for the financial crisis, that ING Tangerine might still be independent today. In fact, at the same time, I don't know if you recall Ally Bank, which still exists in the U.S. and they were a competitor of ours on the deposit side. They were the third largest auto lender in the country. and certainly something I suggested to our board and our shareholder is, you take ING Direct at the time, was the sixth largest deposit taker in the country, seventh largest mortgage originator in the country. You add the third largest, auto lender in the country, you've got a very, very formidable competitor that can turn the big five or the big six into the big seven. And listen, there just wasn't an appetite for it at the time, in part because of the financial crisis. I think, anything like that is subject to the whims of the capital markets. And, for some reason, it just turned out to be unsustainable here in Canada. And they made the decision to sell. ING did everything actually in the United States and Canada as they repatriated around some of the other countries. But there's no doubt that there's room for more. And I think the size of the prize gets bigger all the time, because I think there's more and more Canadians who are not very well served by the existing options in this country. So I'm very optimistic that there is room for a group of challenger banks to really, really make a difference.
I just want to talk a bit about CanTrust and your joining Fintechs Canada's board. On CanTrust, it's been reported on, so I don't want to ask you about what exactly happened. I want to ask about how you felt. Like, what's it like to be on the end of an adversarial agent of the state? It's not a situation I've ever been in, but I am curious. What must that feel like?
Yeah, I mean, it's through that process, I experienced lows that I couldn't have imagined, and highs that I couldn't have imagined either. I mean, in my 21 years with ING Direct, 9 as the CEO, I mean, I was on the right side of the press at all the time. So exciting about the value we were adding to Canadians and the innovations we were bringing to the market. Well, just sort of very briefly explain that. I think I've already mentioned, I'm a lawyer, and I left, the legal practice, although in very early days, in my late 20s to help, start ING Direct. I explained this captivating vision that I was so excited about, and the potential impact we were going to have on the lives of Canadians and maybe even people around the world. And ultimately that's turned out to be what happened. And in that case, I took a risk, with my career, right? And fortunately, I joined a winner, and I was able to personally be successful inside of that ecosystem. I was able to learn, I was given opportunities, and I was just really, really a part of a winning team for most of my career. And after I left, I was looking for something that would have an equal impact, even on a global scale. And you may not remember this, but like in 2018, which is sort of when I joined, was in the middle of this opioid crisis, and fentanyl, was sort of the early days of those types of issues. Those were some of the big problems that society was facing. And when I was recruited to be the CEO of a leading medical cannabis company, I was very, very excited to be a part of something that had so much potential impact. As well as the global opportunity. It obviously reminded me of another what I had done before. Several times a week, I would sit in the call center and I would speak to our patients, and I heard about how we were impacting their lives. And then, bam, one day the industry began to implode, and in many ways it started with the company that I was hired to be the CEO of. I'd been with CanTrust for only 9 months. And for some reason, the media put CanTrust and me very much at the front of some of the sort of the licensing and regulatory issues. So the real question you're asking me is, how did it feel? But I had to give you a little bit of context, right? Alex, I was angry. I felt betrayed. I was terrified for myself, for my family. I was so confused about how I could be in that position all of a sudden. These were really the toughest days for me and my family. Fortunately, for the most part, we haven't had to deal with significant health issues. But these were very, very challenging times. And that's how I felt. But on the other edge of the coin, I mean, these court proceedings were scheduled to take place like over a 3-month period. And after only 2 days, it became very clear that I and the others were going to be completely vindicated. Alex, during the third day, the court needed to be in recess. And I like telling the story. It was December 13th, which was my birthday. And I'm sitting at my kitchen table with my mother and my wife. And we're sitting there at the kitchen table. It's 4:30 in the afternoon and my phone rings. And it was my lawyer. And I picked up the phone. I said, "Hey, Frank, what's up?" And he said, "Peter, I hope you're sitting down, but I want you to know that this is all going to be over with tomorrow. So we'll see you in court tomorrow." It was the first time, Alex, in my life that a birthday wish I had made actually came true on the same day. It was that point in time is tagged for me emotionally, so I cannot avoid the feelings of what that felt like that day. And then to read the media coverage in the days that followed, which you don't usually get the media coverage finishing the story. It made me feel just so good, so strong, so confident in myself. So listen, for me, there's a couple learnings here. I'd say one is I left my legal career to go help start ING Direct. That was a big swing that really, really worked out well. I went to go join CanTrust, a similar type swing that I was very, very excited about. It really didn't work out, but I'm not going to stop taking big swings because that's what makes life fun and exciting for me. The other, I think, most rewarding thing was the friends and family. Like I'm telling you, Alex, people that I worked with 15 years ago in another country were sending me notes saying, "I'm with you. I know you. I know this is not real. It's all going to be fine." And I think the lesson for me is how you treat people in work and in life throughout your life is authentic for me, but it can really pay dividends in the long term. That was that story. That's how I felt. And those are some of the lessons I learned from it.
You were hearing that everything is going to be fine. Did you feel that way throughout the ordeal, or did you doubt that at certain points?
So I always knew my behavior. I was there for 9 months. I knew what I did and the way I behaved and all those types of things. And so I was very proud in everything that I did in my very short tenure there. But Alex, I had doubts. I couldn't believe I was in that situation. I could not believe the media were writing these stories that were not accurate. And that, it was moving forward, like in terms of the sort of official, regulatory bodies and those types of things where, so it did create some doubt in my mind, which is why the great sense of relief, when it was clear that it was all going to be okay. And that was like, I don't know, like 2.5, almost 3 years ago from now, but it's a very short part of my life, 9 months, but I think some very important and some great lessons.
You had told a Financial Post reporter, I think, that you had received death threats throughout this thing. I've received death threats before, but only from someone unwell, like walking down the street. So I never actually took it as credible. Were these like, was it like a credible threat? Were you like, oh my God, like I need to fear for my safety?
Yeah. Well, I don't know how credible they were, but this company was a publicly traded company, and so the stock went down, rightly or wrongly, and it's really unfortunate. But yeah, I received death threats. I had to pay a security person to sit outside of my house for 4 weeks till they died down. That I paid for myself, and we were generally worried. I had three young children at the time that were in high school. And so they seemed real to me, but they died down. And, even my children's friends and their schools, how they stepped up and supported our family, and had our kids stay at their house. It's just magical, like what friends and family and community, how supportive, how they can hold you up when you're having really difficult times. But yeah, it was real, and it was scary for sure.
I can't imagine the resilience you have. You said elsewhere, I think, in a report, and this is my last question about this, that you're a different person having gone through this. Specifically, what's changed about you?
Oh, goodness gracious. I'll tell you, I'm so, I know it sounds like a cliche and everybody says it. Sometimes when they go through a health crisis, they say stuff like this, right? But, you just sometimes in life, you get you're so interested in succeeding and success and winning. And I still love to be busy. I still want to be solving complex problems. I want to be a part of something that has purpose. I want that. I want to work hard too, right? I still enjoy that very, very much. But it just changes your perspective about where your strength needs to come from, what really, really matters, in life, measuring yourself against what other people think, or your title. I mean, a lot of that stuff, you're forced to think about it, and you start to really realize what's important. And I look at, I have goals for myself, and I want to continue to be successful and contribute in business. And I'm thrilled with how I'm helping KOHO, and I hope, in 18 months from now, we're a bank, right? We get all the attributes and the growth and the impact we have on Canadians. I want to have a big contribution still, like from a corporate perspective. But when I look at my wife and my kids and my friends and my mother, and these things are just so important to me. And when I look in the mirror, what I'm proud of is, my stepfather passed away 3 years ago, and I was there for my mom, like, to help her, and she had a really tough 2 years, and I was really able to help her, and that meant a ton to me as a person. And my wife's proud of me, and these are the things that matter to me. So I think they all mattered before, but I think when you look at
think about it,
you're proud of what you see. Yeah. It changes. It changed a lot for me after this.
I totally get that. Before we give the listeners their rest, why did you join our board at Fintechs Canada?
Well, this is an easy question. Look, you had a lot to do with it, Alex. You're a very impressive guy, and you're quite passionate about what you do. So the idea of working with you and learning from you and helping you means a lot to me. I like that a lot. But like, summarizing what we talked about today is part of the answer. I devoted 21 years of my life to ING Direct, Tangerine in Canada and the US, and was really passionate about providing Canadians, Americans, even globally, people with an alternative. We paid people billions in interest that they would have never received. They saved hundreds of millions in fees globally. But many Canadians have less choice today than ever. And when I look at savings rates, when I look at how rates have gone up in the last 24 months, 36 months, and I see what Canadians are getting paid on their savings, I personally find it a little bit disappointing. So we need more choice, and Canadians need access to products that are going to help them get ahead. And I think this is why I joined KOHO. And I think Fintechs Canada has a very significant role to play to help government figure out how it is together we can pave a few new roads that will make it easier for us as a group of challengers to have a bigger impact in this country and create more choice for Canadians. I don't know exactly how to do. I mean, I need to work with you to figure out what are those 3 or 4 roads that we need to pave with government that will make it more palatable for people like KOHO to really continue to have an impact. So I'm excited to continue that work, that life body of work, to create more competition and more choice.
There are many, many things that go into that. One of the things is, understanding and trying to stay ahead of what other stakeholders in the landscape are doing, those that are trying to crowd out your ideas with ideas of their own, those that are maybe even trying to slow down the adoption and implementation of your ideas. When it comes to advocating for policy change, based on all your experience, what are all the ways that the biggest banks in the country are outperforming fintech companies in Ottawa today?
Okay. So the banks in Canada, have been around for a very, very, very long time. They're such a part of the fabric of the country and have been around as long as the country's been around, right? And so they have a very special place in, here, and they have a lot of money, and they have a close relationship with government, which is fine because it's actually benefited us greatly. So how it is, the processes, the systems that they have to prioritize the things that they need in order to be successful, and how those get articulated and shared with government. I mean, they are very, very, very good at it, and they have lots of resources, and I applaud them for that. I think the issue is more about the rest of us, right? Is we're all grinding it out, and we're trying to have an impact, and we are, like, some of us are. But how do we get together better and figure out the 2 or 3 things that really, really matter and really push those forward? So I think it's less about what they're doing and more about what we need to do. That's different. And I think Fintechs Canada is, for me, one of the reasons why when you asked me to be on the board, I chose to be, is I think that's the vehicle to do it. I think if we can expand our membership, increase the amount of resources we have, be clear about those 3 or 4 roads that we would like to help the government pave to make it a little easier for Canadians to choose us. I think that's what we need to do. I mean, there's not much we can do. Those guys are doing a good job. We're the ones who need to figure out how we can be better.
Last question before I let you go. Some of the barriers fintechs face in this country are policy related. We know that, but some aren't. So my question is this: outside financial sector policy, access to payment systems, open banking, the ease with which one may obtain a banking license, what's the biggest drag on the success of these fintech challengers in Canada?
Well, that's a good question. Maybe a bit of a surprising answer. So I think that there is, I've experienced this throughout my career. There is, in Canada in particular, a consumer bias against non-banks. So there's bias in the system. So I've talked to thousands and thousands of Canadians, over my career, and, why they bank, where they bank is, it is what it is, right? Like it's some illogical reason, like that's where my parents opened my first account, or it's the one nearest to my house. And when you ask them about whether you like the service they're getting, or if the products are what they need, or the fee, they're generally not satisfied. I mean, the many of the banks in Canada have pretty low net promoter scores in terms of people promoting to their friends and family whether they would want to join. Yet they still have this inertia, right, about leaving, right, and going to try something new. And I think part of ING Direct and Tangerine, we often get asked a question like, who do you see as your competitor? people would talk about, PC Financial or Ally Bank and I would say, no, those are not our competitors, right? Together, like the more challenges there are, getting the word out to Canadians that there are choices and options for them, to break through that inertia to say, I've got to be with one of those because I've always been with one of those. How is it together we jar or wake Canadians up to this opportunity that they do have a choice, and the choice is a good one, and it's safe. So I think that Canadian inertia, this is the way it's always been, and I'm okay to not be thrilled with this relationship. I think together we need to find a way to open Canadians' eyes that they actually have more choice than they think today, and that they're good, viable, safe, well-run, well-capitalized choices.
I'm not all surprised you said that, because we started this conversation talking about the importance of culture, and we're ending it off talking again about the importance of culture. Peter, thank you so much for spending time with us today.
That's a great pleasure. Thanks for the opportunity. And it was a lot of fun, Alex. I love your probing intellectual questions.
And that's a wrap for this episode. Thanks for joining us. If you're looking for more, visit us at fintechscanada.ca or follow us on LinkedIn. See you next time.